Good afternoon, everyone. Thank you for joining us today for our nonprofit webinar, Navigating Grant Compliance, a Growing Risk Area for Nonprofits. Let's meet your speakers. Today we have with us David Rockcamp, Partner and Nonprofit Practice Leader, and Brian Fryer, Partner. We'll now pass the mic over to David to kick us off. David, please take it away.
Thank you, Sam. Good day, everybody. Nice to have you with us as part of our session today on grant compliance, a wonderful topic. We're going to spend quite a bit of time in the next hour detailing, going through, and understanding the ins and outs and risks around grant compliance management. Pleased to have Brian Fryer, who's a partner in our practice, but also leads our nonprofit advisory practice group within the realm of our nonprofit niche, our national nonprofit niche. So thank you, Brian, for being a part of this and for leading that practice and really taking the lead in working with organizations on their grant compliance. So we know that grant compliance has become one of the most significant emerging risk areas for nonprofit organizations. And as funding sources grow more complex, the requirements tied to them also grow, whether it's allowable costs, reporting documentation, internal controls, or demonstrating program outcomes. For many nonprofits, the challenge is not just about simply securing grant funding, and that's hard enough on its own, but managing it in a way that stands up to increased scrutiny by government agencies and other funding sources is really vital today. This topic is so important because the consequences of non-compliance can be far-reaching. Those consequences include audit findings, delayed reimbursements, which of course impacts cash flow, repayment obligations, if there are disallowances, reputational damage, and even loss of future funding opportunities. Just as importantly, compliance gaps can place added strain on staff or divert attention away from the truly focused mission-driven work. At the same time, strong grant compliance is more than about risk avoidance. It reflects sound governance, operational discipline, and an organization's ability to steward those resources effectively. When the finance, program, and leadership teams are truly aligned, nonprofits are better positioned, not only to meet funder expectations, but to strengthen sustainability and build trust. Today's discussion is intended to highlight where organizations are most vulnerable, what is changing in the funding environment, and what are the practical steps leaders can take to strengthen their compliance framework. What we'll cover today are 7 main areas around this topic. We'll talk about the compliance landscape for grants and for nonprofit organizations. We'll focus on internal controls. We'll talk about COSO, an auditor's best friend, and how internal controls lay the framework and the practical setup for grant management. We'll spend a bit of time talking about the requirements and best practices you can utilize to maintain proper documentation to support the expenses and activities that are going on into your grant reporting. We'll spend time talking about common audit findings and how to prevent them. I don't think you can truly ever eliminate audit findings, but knowing them in advance and focusing your attention on them now can help you reduce them down the line upon governmental scrutiny. We'll talk about the coordination and alignment of finance and program staff, to spending time talking about how we can better create communication channels between the two groups to allow for the free sharing of information, the free sharing of proper information, ultimately for proper claiming and reporting. Interaction with government funders is another really important part of our discussion today. Being able to talk with them, communicate them, have them understand what we're looking to accomplish, how we're reporting things, and us understanding what they're looking for from their perspectives. Another part of the conversation we'll be having today. And last, but certainly not least, is the overarching concept of building a culture of compliance. And that culture begins at the top. It starts with the CEO. It starts with the board of directors and board of trustees. And having a culture of compliance will allow individuals to carry out their obligations in their particular roles, to do what's best for the organization, maintaining the proper compliance requirements, and ultimately the proper reporting to get paid those necessary dollars to maintain cash flow and maintain organizational sustainability. So we're going to look to help you apply best practices identify those compliance risks, and interact confidently with internal staff and with government funders. Now, we think about the compliance and grant aspect across this country, and you think about your own individual organizations as well. There's over 800 billion. That's a lot of zeros. I think that's 9 zeros plus the 800 on top of that. I remember, if I'm doing my math right, $800 billion of federal grants awarded across all sectors. And there are a lot of for-profit organizations that do receive government grants as well. We see that because even in our nonprofit practice, those federal grants which require auditing, we're still doing a lot of audit work, program-specific or uniform guidance work for those commercial organizations as well. That's a lot of money that's pushed out of the federal government to states, local governments, and nonprofit organizations to carry out the important mission that we do in the nonprofit sector every single day. If you think about single audits, and we'll talk about them specifically in a moment, over about 30% of federal single audits cite grant-related findings. And that's still a lot. The number used to be higher 15 years ago. It has come down through education and training, but still a very high number, and one that you want to ensure you have a reduced percentage at. And 100%, in our opinion, of those fines can be prevented with strong compliance and internal controls. So you had the ability as an organization to move the needle, change the behavior, and ensure a strong culture of compliance within your organizations as it relates to its grant management program. At Grassi, I have the pleasure of leading our 650 plus national nonprofit organizations with a team of over 50 folks, from partners down to staff associates, who do great work in this nonprofit sector. About 70% of those clients have some type of federal, state, or local grant that comes into their organization. So working with organizations day in and day out is something we do as a practice group all the time, from an audit perspective, but also from an advisory perspective as well, working with so many organizations, helping them develop the proper infrastructure to set up the controls and the compliance aspects of their grant compliance program. And remember, if you don't comply and have non-compliance, it's not just about having to give $1 back, which is terrible because you've already spent $1. So where do you get that extra dollar? Spend it back, assuming you've spent it already. You have reputational damage, and more importantly, a real significant risk of losing that funding going forward. The government's getting stronger and stricter around compliance. And when they see ongoing compliance challenges with organizations, we're seeing them pull funding and giving that money to or opening that money up to other nonprofit organizations. And we think about the federal compliance framework, we think about a couple of very specific things here. What's listed is 2 CFR Part 200, which is the uniform guidance rules, the federal uniform guidance rules. And while the audit threshold increased to over $1 million or more of federal expenditures in late 2024 into 2025 to require an audit, all of you who receive a single dollar from the federal government or a dollar passed through from a state or local government or even another nonprofit organization must have a compliance framework centered around the uniform guidance. Any dollar in means you have to comply. Just because you may not need to be audited if it's under $1 million of federal expenditures doesn't mean you have to, as an organization, comply with all the underlying compliance requirements, reporting requirements, pre-award and post-award items within the uniform guidance. Very complex area that if you are getting into for the first time, speak to your CPA professionals about so you understand. The guidance does allow for allocability, reasonableness of costs, and other components to ensure dollars are spent properly, including ensuring standards and conflicts of interest are set forth as well. And remember, it's not just a dollar coming in directly from the feds, but also money passed through from the various states where you may be domiciled in, or other states where your programs are in, or even local counties and other nonprofit organizations. And while there are 14 compliance requirements, some of the key cost principles around compliance element A and B, which is allowability and activities allowed, is around the allowability and allocability of expenses, whether they're reasonable, they're consistently treated, and they are adequately documented. So with all that as being the basis for grant compliance management, I'm going to turn it over to Brian now, who's going to start us on a conversation on internal controls and walk us through more of the presentation.
Thanks, David. That was a good start. And you're right. I think we work with organizations, and at least 70% of our organizations have some sort of governmental funding. I would say on the advisory side, that's almost 100%. Very few of our client partners are not receiving something, whether it be your county all the way on up to federal pass-through, federal direct money. And that's why when I look at the title of this presentation, which is a growing risk for nonprofits, I think this is a tale that's as old as time, right? It's been a challenge and an inherent risk for any organization the minute they got a grant, and the minute that they've received that grant letter and said, okay, what do I do next to make sure that we're compliant, that we're going to get it next year, and that we're going to use all of the money that we are being awarded for the right reasons, and just overly continuing the process and scaling out an organization based off that. So one of the the key to that is internal controls. And I want the group who's listening to, whenever internal controls is a fairly mundane topic, and a lot of people think of it as something that's bureaucratic in nature as well. Not necessarily true. If it's done properly, if it's set up initially, your framework is set up initially, it does not have to seem bureaucratic. It does not have to seem like there's inordinate amount of oversight going on. If something is done properly and efficiently and continued, and I think that's one thing we talked about in the earlier slide, consistently treated. And that goes with internal controls as well. If it's something that is consistently treated and practiced by the group, by the organization, then it's not difficult to continue to practice. And so we'll talk about that, and we'll key in on practical setup a little bit, because I know there's varying sizes of organizations. And so it's really within the scope and size of the organization that you have. COSO was brought up a little earlier by David. That's the Committee of Sponsoring Organizations. And they put together this framework to help nonprofits keep integrity in their reporting, in their compliance, in their operations, all key to grant management. And so the 5 areas of the framework that are applied to grants are right here: control environment, risk assessment, control activities, information and communication, which I actually think, if we're going to put this in the order of importance, is number 1, and monitor. So we'll talk about the tone at the top a little bit with control environment. Your CEO, your executive director, or smaller organizations might just have an administrator. They are the tone at the top. They are the guardians of the organization's assets. And when I think of a grant, and I didn't think this in the earlier part of my career in nonprofit, the grant and the contract are your asset. It's not the cash that comes from the grant. That's what makes you the organization. That's what makes you who you are, is your contract to perform services for the public. And you have to treat that grant as an asset, and the same way you treat your bank account. You have to guard it. And guarding it is why we're having this conversation right now. So if your CEO and your head fiscal officer are the true guardians of that asset, then the tone at the top and the control environment has got to be strong. Risk assessment, when we're identifying grant-specific risks, this is interesting because we may have a wide portfolio of grants. You may have a federal grant that has a different way of complying to, as opposed to your state or your county grants. And I know that people on this call have their problem children, so to speak, as far as it comes for certain grants. Maybe there's a state grant that gives people the fits when it comes to communicating with funders and reporting back. Those are grant-specific risks, even though they're not hard and fast risk of losing money. The complications and the challenges that you have with working with funders, with making sure that program understands what's going on, those are risks, and they need to be tracked. Who tracks them at your organization? A lot of larger organizations have a grant or contract manager. That is a luxury in a lot of organizations. I'm completely aware of that. So it could be a controller, it could be a program staff member, it could be any number of people who have the abilities to organize and communicate on a wide variety of grant portfolios. Control activities, this is the kind of heartbeat of the fiscal piece of the organization. Who's doing the approvals? Who's reconciling things? Are we making sure the person who's doing the entries are doing the reconciliation? So that's segregation of duties. Are the approvals being done in a proper fashion? Meaning, is this just a flagging of a couple of different items at one time? Is this somebody who's just saying, yeah, I approve, I'm going to click the button? There needs to be honest give or take on the approval process as well. And if that's something that is not being practiced, we can talk about certain ways that approvals can be handled so that people are actually doing what they're supposed to be doing, which is oversight. Larger organizations do have a structured approval group where you'll have somebody entering, maybe another person approving, maybe a second person approving, depending on the threshold of the amount. In a smaller organization, that might be your board treasurer, who is looking to approve payments, who is looking to approve financial statements or reconciliations. And what we're trying to do, and I know a lot of individuals have this struggle, what is the proper amount of approval that you give or oversight that you give to your treasurer or board member to say, okay, here's a bank statement. How much do I really want you to review this bank statement? Are we just reviewing items that are new to the treasurer's eyes? Are we reviewing items that are large or significant in nature? That needs to be worked out between the organization. But over a few months, that amount of oversight that the treasurer gives should lower. Information and communication, I did talk about this as being the most important. So this is going to come up a little later in this presentation as well. Finance staff has to communicate with program staff, and they have to be on the same page. This is a non-starter. And finance and program staff have to have an aligned vision when they are working with their funder as well. Finance staff cannot be in a position where they do not know what the program staff is telling the funder. And that's important because there's not just the financial risk involved with poor communication, there's reputational risk as well. If a government funder works with separate parts of an organization and they're getting a couple of different stories, well, that does lead to reputational risk of the funder to say they don't really have it together right now. Their controls and their information are not timely and accurate, and we have to monitor them a little closer. And that might jeopardize future funding. And monitoring. So what type of things can you constantly be doing to review grant activity? How are you staying compliant with reporting? And this isn't just fiscal reporting. This is anything. If you're a New York State recipient, if you're on SFS, how do you know where you stand with your funder on reporting? Who's giving ongoing review of that grant activity? Who's actually saying, okay, we didn't hear from our funder on this, which happens, but there is a report missing programmatically. There is a finance report that is a little late. How do we get those done? And then when you have continuing issues with monitoring, what are some actions that you can put in place? Is it a process issue? Is it a people issue? Those are both important to understand before you make a corrective action, so you're doing it for the right reasons. So right on to segregation of duties. Small nonprofits can struggle here. We'll talk about that a little bit. Larger nonprofits tend to have that structure. And then there's compensating controls for smaller nonprofits, like a dual signature or the board treasurer review that we've talked about. But no single person can be the hero of an organization. There should be nobody holding all of the cards when it comes to financial information, programmatic information. If that's the case, you are dooming yourself when it comes down to actual review, when it comes to giving funders what they need to know that you're actually serving them. So I've seen this a lot. I've seen where there is a higher ranked individual that is really appropriate. Say it's the CEO or the CFO who knows 100% of the inherent risks of a grant, all the information that's needed, but it doesn't trickle down in the appropriate fashion. And if it doesn't trickle down, then the communication has ultimately stopped. That is a major, major issue. And that's beyond segregation of duties. That's a key person risk. And that's something that I know that there's a lot of leaders at organizations who like to be involved in everything, but there is a little give and take. There is a little bit of saying, I can't actually handle all of this information. It's not actually doing us any good. So who am I going to delegate this to? Is it going to my controller? Is it going to a chief operating officer? That's all really important to understand. So no person is a hero in an organization. Knowing a lot of information is not that great if you're not communicating that information. Authorization and approval controls. These are things that every organization already has. If you don't know what an authorization matrix is, and it's just a one-pager or a two-pager, and it can also be embedded in your financial policy or procedure manual, if you have one. Actually, a word on that too, on your manuals. If you have a policy procedure manual that's dated pre-March 2020, it's clearly out of date. And even if it's something from a couple of years ago, it's clearly out of date. That needs to be reviewed on an annual basis. The reason why is because I think we all learned that remote work isn't necessarily as difficult as it needs to be during COVID, when everybody was still working. Some people were on site, obviously, but a lot of work was getting done from bedrooms and from offices within houses. And so that is going to lead to changes in your policy or procedure manual. So if you're having to provide that manual to a funder, and it says that you're still writing checks with dual signature, but you're actually using bill.com, that's wrong. And that needs to be obviously updated. The authorization matrix is basically columns for each individual within the organization who's involved in the process. CFO, COO, controller, senior accountant, staff accountant, grant biller. These are just titles, but they all have a part in the approval authorization matrix. And then where they stand. And you've probably seen something very similar where there might be a check mark or an X for whether they're responsible for this item. I think that's a great way to, if it's embedded in the fiscal policy manual, making sure that that information is set. People know where it is. That's another key to this. We can do all the work in the world to shore up authorizations, approvals, but if nobody knows where that document is, that's a problem. And that's a key to, we'll talk about documentation a little bit, but that's a really key part of communication, is making sure that everybody knows where the document itself is. So here's your second CPE keyword. It's compliance, or if you don't need CPE credit, that's okay. I'll keep this on for about 30 seconds before we move on to documentation. But just to talk about documentation a little bit as you're clicking on this, if you're going back to the computer for something. If you do not document something, then how would anybody know that it actually happened? Right? So that is the key. We can have the best interest in putting together an allocation document, making sure that allocation document is proper. We say, okay, here's our staff. We know that so-and-so is working 50% on one grant, 25 and 25 on another, and I don't have a timesheet that justifies that. So what am I really doing? Without that documentation, I can't tell a funder for real what this allocation is. And if I don't have that allocation and that document, then it's going to be really, really difficult to continue on. Why does this matter? So if I looked at these three boxes, you got your finance, you got your program, and you got your admin. The admin, you can put a two-way arrow to each of these boxes, circle it up, have admin hit financial records, have financial records hit program. It all is intertwined. There's no doubt about that. So what are we doing with this documentation? Well, we're making sure that it's in a place where everybody can locate it, where it's germane to them. So program folks may want to see where there's a timesheet for an individual. They're definitely going to want to see budget versus actual report in discussion with finance. So if this is all located in a central location and also easy to identify. So I know that a lot of times there's documents that, we're best efforts, we're putting all the documents into a folder for a particular grant, but then there might be 7 versions of a budget, and that 7th version might not even be the most updated one or the one that's approved by your funder. Then you have to come up with a naming convention for your organization to make sure that everybody's on the same page. It could be as simple as saying FY 2026 CICFP or OVS or youth bill. Something that identifies the grant and then identifies what exactly I'm looking at. So it could be the budget. It could be the signed contract. It could be the tracker that you're tracking the monthly expenses on. It's very important that that information is easy to find, because that's where I find a lot of people are spending their time. A lot of people are spending their time looking for things which already exist within a system. And that's not how nonprofit professionals should be using their time in 2026. And so you can see here financial records. That's the bare minimum things that we need to have to give to a funder. Program records, these are just examples of some items that were being asked. And then on the administrative side, which can also coincide with financial, very, very deeply intertwined, the grant agreement, any modifications, any correspondence, and I'm not just audit correspondence, but correspondence with your funder. I have been in a situation, or my client partners have also been in situations where we've talked to a funder, and that funder has said something, but it never actually ended up in writing. And then you look back and you try to find that item in writing, and then you're asking the funder for that in writing, and it might be 2-3 months later. That's going to cause friction. If you're waiting that long to find that documentation, again, goes back to reputational risk. So these are just a lot of the items that we're aware of that we need to keep. We cannot be in a silo with these three specific groups. They all work in parallel. Finance doesn't do this alone. And I know that a working relationship between finance and program, if it's strong, it is a major part of your internal controls. So one of the biggest pieces we obviously have in our organizations is personnel. So depending on the organization, you could be somewhere 70% personnel and fringe, 85% personnel and fringe. Most social service organizations just happen to have a lot of personnel. And that's what we're in the business of. We're in the business of people. And that's why this is such an important thing to understand, that it's going to be scrutinized. So one item I wanted to circle first here was after the fact certification. That's the second bullet here. And this is a common workaround. And it's something that we've done often, because sometimes it's not feasible for individuals in a smaller organization to come up with an allocation and then have that allocation presented to your payroll processor in an accurate and timely way, or going back in time. And then also having that same information make its way into QuickBooks or Sage or FundEasy, wherever it needs to go. Sometimes it causes more problems to make all of those adjustments than to not. A workaround there is to make sure that there is some sort of after-the-fact certification of time spent. It's not exactly a timesheet, but there is some sort of affirmation that, yes, somebody did work this time. CEO or the CFO agrees with that. So that is something that I've been asked a lot of questions on recently, and I just wanted to bring that up, is that sometimes it is acceptable if you are not doing it for a whole year. You can't just say, oh, I've got to make 12 certifications after the fact. No. It has to be 2 months, 1 month. It cannot wait long. If you wait for a whole year, it doesn't look like you're on top of what you're doing. Very common finding on the bottom there. Charging 100% of a salary to one grant when that person is consistently working and there's no corresponding changes that have been logged in your payroll processor or your books. So that is going to be a major issue because you're effectively double dipping on expenses on multiple grants. And that's why it's important to know that all the employees who work on multiple grants, those allocations add up to 100%. And that sounds like a very simple answer, but you have to check on that. And if there is a change on a grant allocation, if somebody goes from 75 to 50%, where is that 25% going? And when is it getting there? That all needs to be consistent. Electronic time systems are also acceptable. I think we all know that. That's a no-brainer. The more people are using their payroll processors information as opposed to pulling information, putting it into Excel, formatting in that, and providing it in different ways, and it's a go around. It takes too long for that. We need to start thinking about ways or partnering with our payroll provider to get that information directly to where it has to go. One of the things that we look at here at Grassi a lot is different softwares, different AI solutions to take the information from the source and not have it move from one place to the next, to make sure that that information is actually getting accurately and quickly from one place to the other. It's the one, grant finance is the one place where we still find, I know everybody can attest to this, challenges in getting information into somebody's claim form because they're all different. And a lot of times those claim forms are not as high tech as you would like them to be, or formatted in a way that is how you would format that. Or sometimes there's just inherent problems within that claim form. So what we want to do is, we can't always fix that, but what we want to do is make sure that all of the tertiary items outside of that, the controls, the data processing, those are clean, so you can spend a little bit more time working on a claim form that you might not think is the most efficient way of doing it. Here's some basic records retention numbers. I think that this is always different depending on who the funder is as well. They might actually have different requirements, and those requirements need to be discussed with the funder. I don't think any of this is really surprising, and nowadays with most things being soft copy, none of this should really be too difficult. It's when there's paper documentation that is legacy information, that information still needs to be kept for a little bit of time. And that varies by state law, that varies by grant agreement. You need to check those grant agreements. We go back to one of the earlier slides where I said, who's the person who is looking for the risks within each grant? This is a part of that. Records retention is a part of those risks. And that person would need to document and memorialize this so everybody understands what it is. So let's go back, and I'm sorry, I apologize there for going too quick. There's 30% of our organizations that file a single audit have a finding, which makes them a high-risk auditee, which means that it's going to be a more costly single audit, which means that there's inherently a lack of controls. That is not a small number. 100% of those, as I said, those findings are preventable, and you need to have a culture of compliance and oversight that's strong immediately. So this is going to be highly practical. And if there's any questions or thoughts on identifying, preventing, detecting these risks, you can put them in the chat. You can put them in the Q&A as well. So here are the most common audit findings for nonprofits. I don't think any of these are shocking to the group. Almost all of these revolve around poor communication or a lack of communication between groups, within a finance group, between finance and program, between funders. So all of these items could be avoided if there was communication. Unallowable costs charged to the grant. Well, guidance tells us what's typically unallowable, but the contract itself also tells you what's unallowable. I have now, with some of our client partners, I have urged the person who's handling contracts to use their in-house AI solution, be it Copilot or Claude or something else, and look and try to put together a 2 to 3 page summary of the items that are in that contract that are kind of the biggest hit list items. When are reporting dates? What is the contract amount? What's the contract number? What's unallowable specifically within that contract? Who else what other programmatic reports am I having? Because they all have a different date or timeline than the fiscal reports. That is all important information to have. I suggest that if you have more than 2 grants, you have some sort of document that memorializes some of the important parts of your grant. And that way, that will help you to understand how to address these findings. So unallowable costs, that's a simple one. They're usually provided to you within the confines of your contract budget. Reporting errors or late financial reports, again, knowing the dates, and obviously having clean books and timely closes will fix this. But reporting errors or providing information back to your funder about a change that you're going to make, that all has to happen timely. Improper budget modifications without funder approval, I honestly don't know how this can happen. A budget modification needs funder approval. If what this means, and I think what this means on number 6 is, I decide to bill for somebody who's not on my current budget, well, that doesn't have funder approval. But the key is that when you're asking for the modifications, that you know why you're asking for it. And you're asking for it well ahead of time to avoid any challenges or the funder saying no. Most of the times funders are amenable and they will allow that. So preventing, detecting, and correcting these findings, it goes back to policy and procedures. It goes back to people understanding, locating, identifying the procedures within the organization. Are they correct? Has the staff been trained on those policies? Those are all ways to prevent. That's the culture of compliance. Detecting it is from the work that you actually do. And so if you're doing a monthly close, whether it be a soft monthly close or a hard quarterly close, or there's a hard close every month for larger organizations, the budget versus actual variance and the tracking of grant finance are 2 of the biggest items that will help you detect issues. And if you don't have trackers for your grants, I'm more than happy to assist in providing an example, but it's basically taking your agreed upon budget and for the frequency that you are actually providing claims or expending, you see what the run rate for those grants are, how much is left, what's changed, was there somebody who was let go and that's not rehired, which is leaving a gap? Have you replaced that personnel with a consultant and now you can't bill the consultant because it's not in your budget? Time for a modification. And so that's how you detect those issues. And then correcting the issues. If you are one of the 30% who has an audit finding, you are going to be asked to issue a corrective action plan anyway. And so the corrective action plan has to be, in my opinion, it has to be something that's achievable. You can't put an action plan together. You can't clause that. You have to actually use what's going on in your organization at the given moment, identify what went wrong, and then address what went wrong in a practical way. It can't just be, we're aware of it, and here's the 8 things that we're going to do. You're probably not going to get to that. You're going to get to 2 of those items to correct the issue.
Brian, we got a question that came in, and you mentioned it before very briefly, but the question was around document vaults. And you mentioned if you have a couple of grants, you should be doing something specifically to keep track of things. What's your thoughts around using some kind of document vault? And if you use a vault, what are some of the things you would put into that to hold on to and memorialize the activity going on within a grant award?
So I have what I believe the basic 5 or 6 items that belong to a contract at any given time. There might, depending on how finance and program interact with each other in an organization, there might be a program file for a grant. There might be a finance file for a grant. They could be combined, and that could be in the vault as combined or separate folders. But at the very minimum, the finance team has the contract with budget, has correspondence with the funder, has correspondence with the program, has the tracker that I just discussed, has budgets versus actuals that they've provided to program to discuss status, as the claims that they've provided and any adjusted claims. All of that has to be in there. So that's the basics of it. I would like to keep maybe another file or another folder in there for other items, because I don't want to overcomplicate what I'm looking for. But if you know there's something that you're looking at or is already a favorite in your OneDrive, then that's something that probably needs to be in the vault.
I would say also, Brian, to that, I think everything you mentioned is 100% accurate. It's also going to be about, if the award requires programmatic reporting, you may have a section that captures programmatic metrics, attendance or units of service or something that's the measurable unit, to help an organization pull that data quickly in order to put the report or the claim together. And I would say, wearing my auditor hat for a moment, I know going into audit these grants, oftentimes we find that clients are scrambling to pull it and gather this information as it's necessary for audit testing. So having that vault system or some type of repository where everything can be stored by individual grant award is going to be really, really helpful and useful to organizations. All right, thank you for that. And let's continue on.
And I think that
15 minutes left.
Yeah, I think the most important thing is to make sure that even when it's in the vault, that somebody knows exactly what it is with the name. I know it sounds simple, but it's a common issue. I'm going to be very quick with unallowable costs. If you don't know if it's unallowable, ask your grant manager. Ask your funder. Finance and program coordination. We talked about not being in a silo. We talked about finance not knowing what the other hand program is doing. You have to have a check-in. You have to have a shared grant calendar with deadlines. There's usually one person at each organization who's really good at organizing these meetings, who's really good at unearthing that's not been done for a grant to keep compliant. That person should handle that grant calendar and make sure that these check-ins are happening and have that checklist of items. So there could always be this bridge between finance and program. It could be an individual on each side. Maybe it's an outsider. But here's some just basic scenarios where, when you're not communicating, this is what happens. We hire a consultant without the process. We reallocate without telling the program. That's a major issue. I don't know why finance would do that, but if we're reallocating somebody without telling program, that's a fundamental communication issue. And then finance unaware of what's going on with the grant. If there's been a discussion on the grant particulars and finance wasn't aware of it, and finance sends something back to the funder that is incorrect, there goes back to that reputational risk again. Clear roles and responsibilities. I think we know these. I think we know what we're responsible and accountable for in our roles. But here's just a reminder: the finance functions are finance functions. Program lead has very, very basic. There's, if any, finance functions to work with. They approve staff time allocation. They're not entering allocation. They're defining the scope of work, but they're not determining how much of that work is going into the claim form. They're doing program narratives, but we're marrying program data with financial data when needed for compliance purposes. Clear roles and responsibilities. Here's the third CPE. It's going to be up for about 30 seconds. And then we'll get on to interacting with government funders. And so maybe the roadblock is your communication with programs. Maybe that is, dare I say, adversarial in some cases, or there's a lack of trust. it works the same with interacting with government funders, managing their expectations and making sure that what they need from you is clearly understood. And that's the key here. We'll talk about interacting with government funders in about 5 seconds as the CP keyword is still up. It's not an adversarial relationship. That's the first thing when you're working with a program officer. I know that the intent is not for it to be an adversarial relationship, but sometimes it is. And the key reason for that adversarial relationship to bud is usually around finances. It's usually around the cash that's being provided to the organization. If for some reason a claim is late in payment or there's a lot of kickback, that affects the cash coming in the door. And there's a very visceral reaction to working with program officers in that way. So it's not necessarily anybody's fault that the cash has come in. The program officer doesn't usually have as much control as you would think on those items. And we do also have some control in doing things timely and accurate. So when we are working with the program officer, here are the do's and don'ts, some basic ones. You have to have proactive communication. And it has to be open front. When, let's say you're a new controller at an organization, let people know that you're a new controller at an organization and let them know that you need a little bit of their expertise using those terms to understand what's going on. You can't just say, I don't know what's going on, I'm new. The better way of saying it is to say, I'm new to this contract. I understand that you've been working great with the organization. Could you please give me some feedback based upon your expertise? That's going to go a lot longer than saying, I think what you're doing is incorrect. And so just a little bit of massaging the message is important. You're asking for that clarification. You're communicating proactively. You're not just missing deadlines. And so if there was notice that you owed something in 2 weeks and you blew the deadline and you didn't tell anybody, that's going to be an issue. Advance notice is always great. And program officers do tend to work with you in those cases. They'll say, okay, when do I need it by? And then you come up with a common deadline and you hit that deadline. That's what you have to do. You have to make sure it's proactive. You don't just communicate when you need cash or at reporting time. That doesn't help, because then somebody has to dig back into their files and records. Maybe they haven't spoke with you in 3 months, but now there's an acute need on your end, but it might not be an acute need on the program officer's end. And it's going to take some time there, and you'll experience some difficulties definitely on the back end. And then we're a little short on time here, so we'll go through this a little bit quicker. But when we talk about budget modifications, you need funder approval before you make them, and you can't just determine what that's going to be and run with it. We talked about that before. Documenting the rationale of why you're doing a modification is important, as opposed to just doing a modification. In the example I used before, where there's a program staff who is no longer with the company, you can't find the hire for 3 or 4 months, very normal, and you're using a consulting firm who happens to have expertise in this one area, that's probably going to lead to a budget modification. And you know what the rationale is. We just have to make sure that they're aware of that rationale before it happens. So if I have issue finding a staff member after 2 weeks, 3 weeks, I go to my funder and say, I'm just letting you know that there's a challenge in finding somebody for this role. Can you help me find somebody in the role? Can you give me some advice on what I can do in the meantime? Also, in the meantime, I'm using a consultant. Is that okay? Those are very simple discussions to have with your program officer. The self-disclosure or voluntary self-disclosure issue is important. So we talked about this before. Don't just do things without telling people, and also have backup when you're doing it. Identifying and quantifying the issue. And I've had experiences where years that were closed because of previous errors in accounting, we've unearthed that we were underpaid large sums of money. So we have to obviously identify and quantify that issue with our program officer to even get that money. And there's definitely you have to be expedient, you have to be clear, you have to tell them that we understand why this happened and it won't happen again. Direct, factual, and solution focused. And typically it will work out on our end as the fundee or the recipient if we're just open and we explain what's been discovered. So let's keep a proactive with our program officers. So very quickly, building this culture again. Here's some just grant management policies that you should have. We probably all have that whistleblower policy. We all have some sort of procurement policy, the financial management policy, particularly the cost allocation and indirect cost rate. That's important if you wanted to go get a rate with the federal government. You should already have it. So you should already have, based upon uniform guidance, what your allocations are and why you're allocating it that way. So if it's something by time and effort, if it's something by square footage, if it's something by amount of employees, FTEs, that needs to be solid and in place and consistently practiced throughout the organization. So those are essential policies, including subrecipient monitoring. Sometimes you are the recipient and you're giving it back out to a bunch of other sites or locations or smaller nonprofits. Your responsibility is no different from federal governments or the state, in that you have to make sure that you're being a good steward of the money that you've received. Just because it's passed through to you doesn't mean that you're not responsible for what happens with it after it's given to a subrecipient. I mean, training and ongoing monitoring. Just make sure, we talked about a lot of this before, make sure that there's a monthly budget to actual review by grant and a tracker. We talked about this tracker a lot, and we work within trackers almost every day, particularly if you have a lot of different grants. It has to match your budget. Your claim has to be put in there accurately to see what's left, and you have to understand where a modification can work. That is the biggest key to fiscal grant compliance, which will bleed into programmatic compliance as well. But that is a non-starter document that you need to have and work with. Typically, somebody who manages that is your controller or your grant manager or grant biller. That is the key person who has all the information that's needed there. And at the very least, the items on this checklist are important. And you can write this down, take a picture, but these are the items that you would need at closeout to determine whether you're ready for closeout. So making sure everything is in programmatic and fiscal on time. Reconciling your grant expenditures to the general ledger. If you have a column for a grant and the amount that you've claimed does not match the expenses on the books, why? Your regular auditor is going to review that too. Ensure that all your invoices are received and paid. Making sure that you've covered everybody who's a vendor on that particular contract. Seeing if there's any unspent funds. This happens a lot, and because you may get an advance on funds. Or dispose of equipment. So if a funder gives you equipment, if a funder gives you money for equipment, sometimes it's technically the property of that funder. Archiving grant files, we talked about retention. Document lessons learned from future grants. That's key, and that's going to come in with the correspondence that you're having with your funder and the program team. And then just making sure that there's no recipient issues at the end of the day. Everything needs to be tied up, and you feel comfortable that you've done what you can from a compliance standpoint for each grant. So this is just key. These are also ongoing checklist items that I would maintain as well. And here's our 4 CPE word. I think this is our final. I'm not sure about that. So we'll go through.
And this definitely is our last CPE keyword, Brian, for the session as we're nearing a close. Give another 10 seconds or so, and then we'll go to some key takeaways and some questions to think about as we leave organizations to look back at their grant compliance and grant management programs in their organizations. So if we go ahead and maybe to the key takeaway slide, we can see with everything that Brian talked about over the last 45 minutes or so, really, really important to focus on these 6 areas as you think back now and strategically look at your grant management program. And that starts at the very beginning from a grant award at the pre-award level to the grant writing all the way through to post-award, to spending, reporting, and even to post closeouts, when you need to hold on to things and maintain stuff. So having those great controls, maintain that documentation. As we say in the audit world, if it's not documented, it wasn't done. If it's not written down, it didn't happen. Whatever language you want to use, it's all true here. Working together in alignment, creating that culture of alignment between finance and program, really, really important to ensure the clear delineation of information. And of course, maintain that cultural compliance aspect of what you're doing. We threw in the slide deck a couple of questions to think about as we leave you today around what's the most significant compliance risk in your organization right now, based on what we talked about, and what will you do to address that? What's the one internal control you wish you had implemented sooner? Not too late to change internal controls as you move forward. And how does your finance team currently coordinate with program staff? If you take a step back, what is the true interaction that is there? Is it free-flowing? Is it informational? Is it collaborative? Is it regular? And is it timely? So all these things you have to be thinking about as you move into an effective grant management program. And lastly, the materials do have some information around some key resources to think about, to hold on to on your computers, in the cloud, on your bookshelf. For an old guy like me, whatever you want to do, make sure you're looking at these different types of things as part of your overall grant management program. Brian, to the top of the hour, great job as always on this topic, and thank you for leading this that we have here at the firm. We thank everyone for being part of today's session, for your questions, which we answered throughout the course of the 1 hour. Any other questions you may have, please feel free to reach out to Brian or myself. We're more than glad to get back to you with any information you may need about the firm, about this particular session, or about our work and helping organizations with their grant management program. Thank you and have a wonderful day.